During the summer, the euro crisis deepened when the contagion effect from the peripheral countries of Ireland, Greece and Portugal spread to very large peripheral countries, Spain and Italy. Over the past few days, the contagion effect has now spread to the centre of the eurozone, most notably French banks, mainly because those French banks are themselves exposed to the sovereign debt of the European peripheral countries. This has caused a number of difficulties. Among those difficulties has been a very sharp decline in the share price of many of the big French banks, declines in share prices that are of the same sort of magnitude that the Irish banks suffered in the months leading up to the banking crisis in September 2008. So those banks are very weak, and combined with a weakening euro area real economy, there's a concern that the euro area crisis is now going to move into a phase more similar to the post-Lehman period in late 2008. And given that they are now much weaker now than they were going into that crisis, there is a real fear that this situation could be even worse than at that time. Another reason there's concern for a deepening of the crisis is that there are fewer things that policymakers can do. The last time round, governments had more money and were able to borrow to cushion and spend to cushion the downturn. Interest rates were also much more at more normal levels, and central banks were able to slash interest rates. Now interest rates are close to zero in most countries. So this leaves the range of options narrower and the whole financial system weaker. Earlier today, the European Commission President came out and said that the European Commission would put forward its proposal for effectively a fiscal union in Europe, and he said that nobody should be afraid to use the word federation, which is pretty much what a fiscal union would mean at the very least. Also, the Commission proposed that two of the bailed out countries, Ireland and Portugal, would get further cuts on the funds they receive in the context of their bailouts. Later on this afternoon, the German, French and Greek leaders are due to have a teleconference. There's high expectation that there will be something concrete to emerge from this to help calm fears that Greece is about to default. These fears were raised over the past few days when people within the German, both within the German government and close to the German government, spoke about the possibility of allowing Greece to default. Up to now, there has been a no default position, and if that were rolled back on, then there is a fear that it could have the sort of, again, Lehman-like confidence shattering effect. So considerable concern about that, and great anticipation that there will be something substantial coming out of that meeting. And there are further meetings to come. In Poland, finance ministers will be meeting. Timothy Geithner, the US finance minister, is very unusually going to come to that meeting and attend. So there's anticipation that the sort of coordinated global action that took place in late 2008, early 2009, is ramping up again, and that would give greater confidence that policymakers are addressing the situation with proportionate policy actions.